Have you ever been stuck in a choppy market? Here's how I turned a choppy trade into a winning trade on pound dollar. And in this video, I'm going to share with you my scalping strategy that I use on pound dollar and how this one decision made such a massive impact on the trade results. Hey traders, and welcome back to Mindfully Trading. If you're one of my regular subscribers, you may notice that there's something a little bit different in this video today. I've finally taken advantage of my husband's carpentry skills and given my office a little makeover, which I'm thinking of sharing more of in a future video. If you're interested in learning more about my trade setup, let me know in the comments below. But in this video today, I'm going to show you some tips on how to day trade pound dollar, especially when it is a choppy market. There are techniques that you can use to really protect the trade to ensure that it gives you a profit over a loss. So make sure you stick around for that. And later in the video, I'm going to be sharing an update on my prop trading account with the prop from the 5%ers. We'll log into the dashboard and have a look at some all-important trading stats. All of the software I'll be using will be linked in the description below. Please remember to like, make sure you're subscribed to the channel, and let's get straight to it. The trade recap that I'm going to share with you in just a moment for the scalp trade that I took on pound dollar was originally taken on Monday the 7th of October. Now, I took the trade intending for it to be a day trade, but I was still in this position overnight, so it didn't actually reach its resolution until the Tuesday. And this just shows how slow and choppy the price action movement has been on pound dollar this week. Could it be due to the upcoming election? Could it just be due to the fact that we are consolidating on the daily time frame and so the overall bias is unsure? Who really knows? All we can do is best adjust our trading strategy to reflect the current market conditions. As we all know, trading is risky, and it's so important to manage that risk so that when you are trading during these choppy phases of the market, you are protecting your capital, waiting for when the market moves again to aim for those larger winners. And that was what I experienced in this trade. Let me show you. Here is the daily time frame for pound dollar, and we have been in this strong uptrend. We made a new high here. Since then, price seems to be selling off, and this week we have literally just been in this very slow downwards sideways consolidation. Now, looking at this on the daily, you can see how small the candlesticks are. There's not a lot of movement, there's not a lot of range. It's certainly not been the week to hold long-term positions, and pretty much all you can do in that is either sit out of the market or aim for those very short scalp positions, which is what I did to still manage to hit my weekly targets. So to give you an idea on how I managed to take a scalp position, let's use the backtesting tool here to go back in time. So I'm going to remove the candlesticks and go back to what I could see on the Monday. My attention is immediately drawn to this huge candlestick here, which was on the Thursday, because it is the largest candlestick closest to the most recent day. We had this massive sell-off, and then on the Friday, it closed a very small, bullish doji candlestick. So it didn't continue this downtrend. It looks like it wants to pull back and move up, but there's not a lot of momentum now to the buying side because the sellers have taken over with this huge momentum candlestick going down. So from this little setup, my thoughts were that price wants to pull back. It's building some support here for the buy side, but I was very cautious because I did believe that the sellers were in control. So it was quite unpredictable on Monday morning. Dropping now to the 4-hourly time frame as part of my top-down analysis approach, you get a little bit more information. So once again, you see this huge candlestick down on the 4-hourly. We had a small pullback and we had another big bearish candlestick down here on the Friday. But it didn't really close below this previous low much further. It did make a new low. But after that, we had this bullish candlestick up and then we were consolidating on the Monday morning. From looking at the larger scale time frames, I had an idea of my weekly bias. I knew that it wasn't that clear. I knew that there wasn't much volume, and I had a feeling that price may want to go up for a pullback, but there wasn't a lot of momentum for the buy side. So what's the best course of action? Well, my next step was to look for some news analysis. And for this, I looked to forexfactory.com. Forexfactory.com is a brilliant resource. It's free and it allows you to view a calendar of upcoming news and economic events. So here you can see this week that there wasn't any news due to be released on the Monday. On the Tuesday, it was only for the Australian dollar. Wednesday, we had some major news FOMC minutes for the US dollar. Thursday, again, is the US dollar core CPI. And then Friday, we had pound GDP in the morning and core PPI for the US dollar in the afternoon. So the week was hotting up, but at the start of the week, there's basically very little news for pound or dollar. What did this mean? For me, this meant that any trade decisions were going to be based purely on technicals. To help assist me with my technical analysis, I add a couple of indicators to my charts. The first is the daily high or low. This shows a line, a horizontal line across. The dark blue line represents the previous daily low, and the light blue line at the top here represents the previous daily high. And this is a very crucial part of my trading strategy because I'm looking for a reaction around these key daily levels. I also add on this one called round numbers above and below, which adds these black horizontal lines. These are placed at institutional price levels, which are usually the half and the whole dollar amounts. Once again, you can sometimes see some interesting reactions around these levels. I don't trade purely off these levels, but I look for a reaction, a candlestick signal, or a pattern around these levels. The more signals I get, the more added confluence it is to justify taking a trade. The more signals, the lower the risk because it increases the accuracy. But as we know, there's always risk with trading. If you want to learn some more about these technical concepts, I talk about them more in my book, Forex Trading 101. There's a link below in the description if you want to find out some more information. So during the London session, we had a sell-off and price came to the previous daily low. It consolidated, it broke, but there was no momentum. There was no massive candlestick breakout here. There's no volatility, no volume, nothing. In fact, price decided to come back up and it closed above the previous consolidation, which to me is indicative of a potential reversal. So moving on into the New York session, I was watching this with the trade idea of looking for a long position, aiming for a short-term reversal. 1:30 GMT, the New York session opened and I had a look at the charts. And at this point, we were making this very interesting pattern. Price came back down in an attempt to retest the current intraday low. We got a large candlestick down, but it made this bullish pin bar right at the previous daily low. From there, it pushed up and it formed a new high for the New York session. So I'm very interested in the intraday lows and highs and also the session lows and highs. And for the New York session, we'd opened here, we'd come down here, and then we had come back up here. Price is pushing up. The New York session has made a new session high, and I think this is a rejection of the previous daily low. So I used my Fibonacci retracement tool. I placed it to the low of the body of the New York session, and I added it to the high of the New York session body. And this brought up these three areas of optimum trade entry, which are the 62%, 70%, and 79% levels. Then I placed an order for a buy just above the 62%, which was at 1.3078. And for my stop, I used a 15 pip stop. So it wasn't quite at the low of the day, but it was placed just below the low of the session, the New York session, and it was below this key daily level as well. And to begin with, my take profit was set at 1.5R, 1.5 times what I was risking for the trade. That's my usual take profit, aiming for day trades, or in this case, a scalp trade. And so price came down and triggered me into this trade long. It started to curve and we had this large momentum candlestick push up. At this point, I set an alert at my stop, an alert at my target, and I closed the chart and left it because I thought this was looking good. The momentum was coming into the buy side. I was expecting it to hit my target within the next 30 minutes. But it didn't. I checked this after the 4-hourly close at 6 o'clock and I saw this pattern taking shape. So price was swinging higher and it was getting close to my take profit. Now at this point, I did something that I don't always do. I interfered. I messed with my trade. You see, I was trying to get 1.5R profits, but I felt like it was losing momentum to the short side, and I felt like using that larger time frame analysis, the daily, the 4-hourly, I felt like price wanted to pull back a bit more. So I decided to try to trade this as a reversal, and I extended my take profit. I actually extended it all the way up to this institutional price level, thinking that price would break this level right here. So I changed my take profit, and then I left the trade to run overnight. And this is what happened. I opened the charts in the morning during the London session and I could see that overnight, if I had left my original take profit, I would be out up 1.5R. In fact, price went 2 times what I was risking. So it was already a profitable trade, but I was still in the trade. It wasn't a realized position yet. And so I left the trade. and continue to monitor it. What just happened then? Price came down so close to my stop. It came down just 1 pip away from my stop loss. At that point, I was regretting the whole thing and wishing that I just stuck with my original take profit, but I was still in the trade. Then the New York session started once again on the Tuesday at 1:30 GMT. At this point, price was trading above my 1.5 hour take profit, but it just wasn't giving that explosive breakout that I was looking for as part of this reversal. In fact, it still wanted to retest this consolidation area, and so when price pushed up here, but had this large wick rejection, I decided to trail a profit stop. And I placed my profit stop just above this institutional price level here, which was my 1.5 hour target. Then price came down and it triggered my profit stop, which meant that after all of this work, all of this checking, leaving the trade to run overnight, the worry, the anxiety of it coming close to my stop, I got out of this trade with my usual 1.5 hour target, which I could have got right at the beginning and saved myself all of this hard work and headache. After that, price still continued to go pretty much nowhere. In fact, moving on into the Wednesday, it came all the way back down again and it would have hit my stop loss. So if I had left this and been aggressive and wanted the market to do what I wanted it to do, I wanted it to reverse, I wanted it to go up to that larger target. If I had left the trade to do that, it would have resulted in a loss. So I'm really glad that I was monitoring this and I decided it's just too choppy and unpredictable, just get out. Plus, there was major news coming in Wednesday, Thursday, Friday. I didn't want to be caught in this at a disadvantage. So what are the main takeaways from this trade recap? Well, it's really useful to use trade alerts. You can do that by hovering over the axis on the chart here on TradingView. You'll see this plus sign, and wherever it is you want to set your alert, you can press the plus and click add alert. Now, I usually use these in 2 different ways. I will add an alert at the key levels for a crossover, but when I'm in a trade position, I always add an alert at my stop. At my entry, because if the price has already moved up or down, I like to know when it comes back to my entry. I usually place one at 1 times my risk, because then if it does move to that, I know I'm still in the trade, but it's going in the right direction. Might be a good time to just check in and see if I need to move my stop to break even. And then I will place an alert at 1.5R. Trade alerts just help you to monitor and manage a trade without needing to be at the charts 24/7. And my other key takeaway from this trade recap is to always put it into perspective with the overall market conditions. So in this context, it's a market that is being quite choppy, it's slow, there's no volume. Is it really the best time to aim high? Is it really the best time to let a winner run? Not really. It's unpredictable. We've got major news coming out and we don't really know whether it's going up or down because there's no volume, there's no momentum. So it was better in this occasion to just get out and be happy with the profit I made, which you can see here in my broker on MT5, the broker I have with the 5%ers. So it's the only trade I took this week on pound dollar. And it's the only trade I needed to take. It hit my weekly target. It might not look very much, but that's because I am taking it very slow and steady in this prop trading account. I also took the trade in my live account as well. So I trade the 2 different accounts. My live account is with the broker IC Markets. But as you can see here is the dashboard for my prop trading account with the 5%ers. I'm currently enrolled in the Hypergrowth program, starting with a $20,000 account. My target is to make $2,000, 10% of that. And I have a max loss to respect of 6%. So if I lose that, that means that I have lost, blown up the account. But so far I am making headway to the target. I'm just over halfway there. Another small step forward, waiting for the market to bring in some more momentum so I can really capitalize on larger movements and larger growth in my account. But the main thing I love about this account with the 5%ers is the fact that there is no time limit on it. I'm able to really focus on taking the best A quality trades and enjoying the experience without being worried about trying to hit the target by a certain time. There's no deadline, there's no pressure. It's a very relaxed way of trading, if ever such a thing existed. If you want some more information about the Hypergrowth program, I created a review in this video here. Make sure you check it out. Alternatively, I've got a link below in the description where you can find out more information about the 5%ers, the different programs they have available. They've got Hypergrowth, They've also got high stakes if you prefer to take a little bit more risk, and they've got a bootcamp program as well. So whether you are a day trader, a scalper, or a swing trader, there is a program to suit you. And if you're ready to level up your trading in this way, I definitely recommend them. So it's been a choppy week this week trading GU. How have you found trading this week? Let me know in the comments below whether you have finished green or whether you finished red. It's always great to hear from you. Meanwhile, I'm going to try to share some more live trading experiences with you as long as my boys let me do that. So stay tuned. Make sure that you're subscribed to the channel below with that notification bell ticked. I've got some really exciting content coming up actually, where we're going to be exploring a lot of different trading bots as well that I am super excited about. But as always, if you've enjoyed this video, let me know by smashing the like button. Thank you so much for watching, and I'll catch you in the next one. Bye.